Hello, everyone. Welcome to today's panel. As you can see here, we have a quick poll for you. And as people are coming in, please take the poll. And well, once we have let more people come in, we'll share the results with you all. So we'll give you a couple of minutes for that. And I'm sure our panelists here today will have something to say about the results during our conversation. So please start taking the poll. We'll give you a couple of minutes. Now, let me briefly introduce myself. My name is Gabriela Zapata, and I am a financial inclusion and financial health consultant based in Mexico City. And I'm very happy to be featuring 3 of this year's Inclusive Fintech 50 winners, with whom we'll be discussing how to make digitalization count. And each of them is leveraging technological advances to help understand individuals and businesses meet their financial needs and goals. Well, let me start by saying that I'd like to congratulate all of these year's IF50 winners. And if any of you here today is an IF50 winner, please put that in the chat so that we can provide more congratulations. And well, the competition this year attracted 369 applications from 79 countries. They were assessed by experienced analysts and an expert panel of judges to arrive at the top 50 based on their inclusivity, their innovation, their traction, and their scale. And I can tell you that this wasn't easy because I was one of the judges and there were a lot of great candidates out there. So well-deserved congratulations to you all. And of course, this was made possible thanks to our sponsors from Visa, MetLife Foundation, and Jersey Overseas Aid with Comic Relief, and supporters from the IFC and Acción. And you can see all of the winners on the Inclusive 50 Fintech website. And again, if you're one of the winners, let us know that in the chat. So let's see. Well, I guess we still don't have those results from the show. Oh. I guess, let me see, 95% said yes, fintechs. 5% said no, it's the other way around. And 0% said no, they should focus on staying in business first and impact later. So good. 96%, yes, fintech should lead with impact. And where there's a need, there's a business case. So I'm sure you'll be hearing more about that as we continue with the panel today. So I'm thrilled to have 3 of IF50 winners representing solutions from 3 different continents joining us for this panel. And these companies are all 3 years old or less. And they're all gaining significant traction in their local markets, thanks to their innovative and inclusive product and service offerings, which we will learn about today. And as I said earlier, the theme of this year's IF50 is making digitalization count. So these 3 companies on the panel today are using a combination of tech and touch, or digital and physical interactions, to meet customers where they're at in their digital journeys. And they all offer their services through established and trusted partnerships. So suppliers in the case of Boost, remittance agents in the case of Paisa, and employers in the case of Wagely. Yeah. But well, you didn't come here to hear me speak. So now let me introduce you to our 3 panelists. With us here today are Noxie Mtetwa, who's co-founder and CEO of Boost South Africa, Ryan Newton, founder and CEO of Paisa in Mexico, and Amrita Veer, head of strategy at Wagely in Bangladesh and Indonesia. So welcome to the panel, and I'd like to now give you each 1 minute to provide a short overview of your business, starting with Noxie and then followed by Ryan and then Amrita.
Thank you so much, Gabriela. It's very good to be part of this panel, and congratulations to our fellow winners. Boost is a business-to-business platform that is empowering Africa's convenience economy. We do this by providing a radically easy technology to power the growth for distributors and retailers. Our retailers and distributors can place digital orders via WhatsApp, enabling them to access Stock Boost, which is our embedded finance product that is servicing both our retailers and distributors. Our main operating countries are Nigeria, Ghana, South Africa, and Senegal, where we are currently servicing about 8,000 customers, of which 90% of those customers are women. Thank you.
Great, I'll just go ahead. I'm Ryan Newton, founder of Paisa, and to set a bit of context, Mexico receives more than $50 billion in remittances each year from migrants working abroad. And no matter how the money is sent, more than 85% is picked up in person and in cash in Mexico. And the people who receive the money tend to be financially excluded and financially stressed. And this is where Paisa comes in. We partner with local remittance agencies in Mexico to offer affordable remittance-backed loans via WhatsApp. And we have more products in the pipeline. And so we have a tech touch B2B2C solution that combines assisted offline user acquisition and service with digital onboarding, registration, and proprietary credit scoring. And by doing so, we're bridging the financial, gender, and digital gap left by traditional financial services and Fintech. And we provide the most accessible on-ramp to digital financial services for the millions of cash-based remittance receivers in Mexico. And so with Paisa, remittances, which is such a known phenomenon, becomes more than just a transfer, and it becomes a gateway to financial health for both the families that receive remittances and the agencies who serve them. Thank you.
Hey everyone, I'll go ahead. Yes, hey, I'm Amrita Beer. I am head of strategy and business expansion at Wagely, and I'm also the acting country manager for our Bangladesh market right now. Thank you so much for having us here today. I think it's an honor to be representing Wagely along with Noxie and Ryan here. Wagely is a B2B2C earned wage access platform operating in Indonesia and Bangladesh. We work with large employers to allow their workers to access wages before payday, which can be hugely impactful on improving their financial health, especially for workers who are really living hand to mouth. Just to make it a little more tangible, picture a garment worker, living on $4 a day. Usually she gets paid at the end of the month, but today they have some emergency. It could be a family member gets sick, it could be they get in a car accident, something like that. But they've already worked 19 days, right? Today's October 19th. And so what Wagely does is it enables that worker to access her 19 days of earned wages or accrued earnings today, so she can meet those financial needs in the short term. And she can do this via an app, website, physical kiosk, or even a local agent.
Great, thank you all for those introductions. And well, now let's talk about client onboarding and digital capability of low-income users. So Ryan, I'd like to start with you. How are you adapting to your clients' comfort level with technology to offer them a better product?
Definitely. So we do this two ways. We do it through our distribution channel, and which is remittance agencies, which you mentioned before, and through our technology. And so this tech touch is super important and it's key to our model. I'm going to share a photo to really make it visualize, because I always get the question, how does it really work? And so I'm going to show you guys our agents. This is a typical agency that we work with. And this is one of our clients. So what we do is our distribution channel is offline. These are our partner remittance agencies where they're trusted agents where our clients go every week, every 2 weeks, or every month to pick up their remittances that their loved ones are sending them. And so this touch point really is a familiar touch point that builds trust. It also provides stickiness for the product because they're coming over and over again to pick up that frequent remittance. And with financial services, especially, users want to know they can ask someone questions, that someone's there who can help them, a real person behind the product, and making sure that person is constantly going to be there, because that's where a lot of the doubt around digital financial services can come, right? And the second is we offer our product via WhatsApp. If you see in the photo, she's holding a phone and she's interacting with our bot. This is the Paisa bot that provides all the services. Smartphone penetration in Mexico is super high, like in many parts of the world. Yet that doesn't translate into use of smartphones for financial services. In Mexico in particular, we have over 80, 90% penetration, but the use of mobile phones for financial services is less than 5%. So smartphones are mostly used for messaging, social networking, photos, calls, but we didn't want to cause more friction by introducing an app for our services. So we built Paisa along the rails of a technology that people are already comfortable with and are already using for the most part. And then into your question about how we make it, friendly for the customers, we are laser focused on user experience. I think, as in with any product, if you don't know your customers and how they use your product, it's hard to build traction. And so our bot, we really do our best to make it the most intuitive, delightful, visual. We use audio when needed, and it uses language people can understand. So we hear how clients talk about the product, we listen, we interview, and we represent that kind of language in our conversations.
Oh, that's great, Brian. Thank you. And Amrita, Wagely serves their customers primarily through an app, right? But what other ways can clients access your service in markets with low smartphone penetration?
Yeah, thanks, Gabriela. You're right. I think Wagely was originally formed as an app for workers in Indonesia. But what we've seen, especially as we've expanded from Indonesia, which is much higher smartphone penetration market, around 75%, and there's a lot of consumer tech infrastructure, that app works really well in the Indonesian market. But as we moved into Bangladesh about a year ago, we realized that we actually need to create new entry points for our users who may have, much less access, much less digital literacy. Bangladesh has a much lower smartphone penetration rate, like 50%. And particularly the blue collar segment that we work with, they need much more physical touch. They need entry points where people can actually explain something to them. So we actually have agents, or what we call brand promoters, that actually can help during the onboarding process explain what the product is, and help users actually make transactions, not just at that onboarding stage, but throughout the lifetime. We also have things like physical booths in factories. We also have these physical kiosks. Actually, I think just like Ryan, let me show you a picture of what this looks like. Here it is. So you can see here, we kind of offer like a diversity of entry points because we don't know exactly what comfort level a user comes in with. So they could, use their own smartphone. They could use the kiosk, which you can see it over there. It looks like an ATM. Or we have a physical booth, or we have a physical person. And given the group that we're working with, we've realized that we need to introduce more of these entry points to actually meet our employee customers on their level. I think one other thing that we're doing that we feel like is really innovative is a concept called Wagely Days, which is where we basically go to factory floors and we have these big events where we actually educate people about the product. We also provide financial literacy training. And sometimes, we do giveaways, and we see some really great responses from workers. I think one factory, they even came up with a Wagely song for us because they enjoyed the event so much and learned so much from it. So as we've expanded, from market to market and are trying to reach new customer segments, we're realizing the importance of providing multiple entry points that, again, meet users on their level.
Oh, that's great. Would love to hear that song one day. Is it a rap or just a song?
I think it's just a song. I can't sing it because unfortunately it's in Bangla, but maybe one day someone from the team can come and sing it for you.
That'd be fun. Thank you very much. And Noxie, turning to you, Boost is providing a digital on-ramp for micro and small enterprise retailers. So how do you determine the right level of tech and touch to guide your clients on this digitalization journey?
Awesome. Thank you so much for that question, Gabriela. What we do at the very beginning of the relationship with our distributors, who are mostly our gateway to the retailers, we spend a lot of time trying to understand their growth aspirations, as well as their comfort levels with technology and where they are in their digital journey. So we spend a lot of time and we learn so much about our customers, because what we realized very early on was that sometimes solutions that go into the informal market specifically are usually very presumptuous about where retailers and distributors are in their digital journey, as well as their business in general. So we spend a lot of time just listening and wanting to find out where they are and how they can be best supported. So with that, we have a built-in service where or rather in our model, it's built in that we spend so much time. We make sure that with our onboarding process, there's a lot of touch, because we don't want to hand over a technology or a tool that will not be used because people are struggling with adoption and using it and making it relevant to their businesses. So we spend a lot of time just listening, and with our onboarding process, we make sure that there's a lot of consumer education that happens, making sure that they are comfortable with the technology, and we handhold them until we feel that they are comfortable to then start using the technology independently. So mostly I would say it's through consumer education, as well as spending a lot of time just trying to understand where they are in their journey.
Great. And do you have any photo to show, like
I'll
Rita
share
and mine did? Yeah?
Yeah.
Just to get an idea of what.
Maybe you can just continue, Gabriela, while I load it.
Yeah, no worries. And so I'd like to ask you all, how do you market yourselves to your potential clients? How do they learn about you? And can you briefly tell us about that, Amrita?
Yeah, how do they find out about us? I mean, I think it's largely through the employers that they work for. They, a large part of our business model is working directly with employers. Oh, I see Noxie's picture.
Sure.
Yeah, let me, I'll just finish sharing. Yeah, largely through the employers. We work with employer partners, and those employers, they help us on the ground actually quite a lot. When we go for those initial activation days or Wagely days that I mentioned, we actually go on the ground along with some of the members of the factory teams or the employer teams. And together we'll go to the employee base and say, hey, this is the product, this is the benefit of it, and really use the employers as sort of our advocates. So we have kind of an ambassador program where employers, employers that are what we call power users can actually evangelize the product or advocate about the product to people that work closely with them, and they can actually earn rewards for that. There are, as I mentioned, we also have the brand promoters that will go on site, but a lot of the process requires a lot of learning or teaching the employee base, because that level of digital financial literacy may not be there, and particularly for Wagely, because earned wage access is a pretty new concept in the markets in which we're operating. We have to really explain how we're not loan sharks, we're not predatory lenders, and really show the difference between what we're doing, which is really just in many ways a payment intervention for accrued earnings, and some of the things that the market is already used to. But really, a lot of those physical touch points are really important for us to actually share with our workers what exactly the product is. I would also say one thing that we also think a lot about is how can we embed that literacy in the product customer journey itself. So as soon as you download the app, as soon as you open it, how can the explanation for earned wage access and how to actually make a transaction and what the benefit is actually be embedded in that customer journey, so we can over time hopefully reduce that reliance on physical explanations and physical agents.
Right. And how do employers learn about you? How do you market yourself to them? Is it through your network of contacts or a more digital way?
Yeah, I think
it's a big part of the business.
Absolutely. So the employers, I think largely at the beginning, when we enter markets, both Indonesia and Bangladesh, the employers learn about us mostly from our business development team, who goes and does cold calls or uses their own network to reach out to these employers. I think what we're seeing now is because workers or employers have had such good experiences with Wagely, a lot of that word of mouth marketing is happening for us. Factory owners will tell their friends, FMCG owners will tell their friends, and we're getting more of that virality in the market. I think one other way that we're really excited about to get more employers on board is to actually go through specific channels. Industry associations, for example, like in Bangladesh, we actually last week just signed an MOU with an industry association called BGMEA, which focuses on garment factories. And that's sort of an entryway for us to actually reach their entire base of factories and then onboard those factories as Wagely users. So working with those organizations, industry organizations, even financial institutions who want to work with Wagely to provide the earned wage access solution to their payroll customers. That's another way that we could get in touch with employers. I think right now that's like a really exciting focus area for us is how we can find these really scalable ways to attract more employers.
Great. And Noxie, in your case, how do you market yourselves to potential clients? To those distributors and retailers?
Normally, we use relationships. What we've learned is that in the informal market, trust is a huge thing. We usually call it a currency. They normally, just trade with you on the basis of trust, and trust usually means we know you or we know someone that knows you. So we use our strategic relationships to give us access to our early adopters. And from those earliest adopters, we then have, the word of mouth going out to other retailers as well as distributors. Then they come to us. So that's what we've been largely doing, because we realized very early that trust is a huge thing in the market. And if we do our acquisition or center our acquisition strategy around the partnerships that we have in the market, because most of our team members have been in the space, so they know the people there, so it's much easier to do acquisition. Another thing that we do is that our growth team, we hire field staffs that are rooted in the communities that we are serving. So people are interacting with people that they already are familiar with. They know them culturally. There's not much of a conflict. So it becomes easier to then just, use that infrastructure of trust that has been built around these communities. So it's around people that are centered and rooted in these communities that we work with, as well as strategic relationships that we have.
Right. And how about you, Ryan? How do you go about marketing yourself and your product, Paisa, through those agents?
Yeah, definitely. So first, similar to what Noxie said, we prospect agencies, remittance agencies who are local agencies that would be interested in offering a new service. And so seeing agencies who are well positioned to receive a significant amount of remittances each month, who are paying a lot of remittances each month, and who have a good customer base and reputation in their community, because then they in turn, that's the B2B part, they in turn will sell Paisa to their receivers. And so that is our main marketing channels through the agency. So it's below the line, really just word of mouth through the agents themselves at the window when they're receiving a remittance. So there's that constant foot traffic. We also have promoters, similar to what Amrita has with Wagely. We have promoters who are for a few months to get the customer base going and to tell people, because I have a lot of questions, right? I want to know what this is, want to make sure we're not a predatory lender or a scam in the market. There's been a lot of fraud and scams in the market recently. And so they want to make sure that this is a trusted service. And being embedded in the agency does really help, because they say, they're partnering with my trusted agency, so it must be something I can trust. And that really has helped us. So it's our main channel. And then we also use Perifoneo, which is like, loudspeaker around the locality, social networks, events as well. And that's really to create more noise around the brand so that people have heard it, have seen it, and when they arrive to the agency, it's more familiar. And so that we've been using both, but we find that in the agency is the most effective in terms of conversion.
Right, that's great. Well, trust is definitely an important factor, and there's also some high touch involved in marketing yourselves and getting others to learn about your product and service, right? And well, now I'd like to turn to understanding the value and the outcomes, as well as the impact that your solution has for low income consumers, for your own companies, and also for your partners. So Amrita, in your case, what would you say is compelling about the Wagely product offering for employers? And it would be great if you could speak to the connection between financial health and retention that we've discussed in the past.
Yeah, absolutely. Thanks, Gabriela. So yeah, we do see a really strong connection between financial health and retention. As mentioned, like the product really can help improve the financial life of someone, their financial health, especially that area around meeting short-term emergencies. That can improve not just the financial health, but the mental health and the mental stress that a lot of workers feel that is related to financial stress. I think those two things, we've seen many studies where financial stress and mental and anxiety are really connected. And so what happens when financial health improves for a worker due to the Wagely intervention, it means that they're much happier at work, they're more productive at work. And that translates into impact for the employers. If workers are absent less, that means their productivity level goes up. They can have more output of their actual product. But I think one of the biggest areas where we've seen impact, Gabrielle, as you said, is retention. We ran actually a study with some of our longest standing employers in Bangladesh. We basically tracked Wagely use at factories and their turnover, or what they call in Bangladesh migration, because workers will migrate from one factory to another for like really small increases in pay. But what we saw is with Wagely use, these factories saw migration reduction up to 60%. Which is pretty huge for some of these like large factories, which, they're seeing, especially around holiday periods, like, 30% of their worker base will actually migrate from one factory to another, just, for a small increase in wage. So Wagely has actually helped reduce that really big concern for employers. It means that, they have to have less staff that's focused on, acquiring workers and retention. It means that they can reduce their costs that are related to, training new employees really often. They can reduce their productivity loss. I think these are all hugely impactful things for employers. And just one anecdote that we've heard is that one of the biggest factories that we work with, a few employees around the holiday, the Eid period, they actually left to go to a new factory. Went to that new factory, spent a few weeks, and realized very quickly that they didn't have access to Wagely there. So they came back. And so, it's stories like that we love to hear. It's like, we know that people are actually really willing to use our product, not just the employees, but the employers. And it's having a really big impact there.
Well, that's great. And Noxy, well, similar to Wagely, Boost is managing separate stakeholder relationships. So how are you thinking about the potential impacts of your product, both for distributors and for retailers? And do you see any tension there, or are the priorities and incentives pretty much aligned?
There's a great alignment between there's a great incentive, with all our stakeholders. In fact, how we think of it is we want to build win-win-win situations where all our stakeholders win. How we do that is by enabling our distributors with technology. They can run efficient businesses that can serve our retailers much better and more efficiently. They can access quality products at cheaper prices than they normally would without, our value proposition to them. So by our distributors running efficient businesses where they can access product at reasonable prices, they offer that to the retailers, who then benefit from the efficiency as well as the good pricing, which ultimately also benefits the end user, who largely benefits from that. In the townships, you find that a lot of people think of their areas as dumping sites for some of these suppliers. So with us working with distributors and retailers, they feel that they now have more access to quality product, which really for us, it's a relationship of multiple wins that we enable through the provision of our value add services like your embedded finance, the technology, as well as the value add services that we offer to our stakeholders.
Well, that's great. And now turning to Ryan, what have you learned through your interviews with your clients? Because you've been interviewing them a lot, you know? So what are they using the loans that you're providing through PISA for? And why do they keep returning to you for loans?
Yeah, that's a good question. And I think there's a lot of times, and I hear it a lot, common misperception, like, oh, they receive remittances, they're okay, they're better off, they don't need loans, right? And we get that sometimes from agencies or other things, and then you start digging and understanding the user. And of course, PISA came out of user research, so we knew there was a need and a problem to solve. But in our ongoing research, we've learned that clients are using loans to cover a lot of things, from investing in small businesses. So, you know, a lot of times you have to buy all your you know, your final product, if you're gonna sell, you need to buy all your inputs, the material, if you're gonna sew dresses, the raw materials for purses, whatever you're gonna sell, you need to buy all of that up front. And so it's enabled people to buy more volume so they can then sell more at the end of the month. It also is used to cover emergencies like sickness. So a remittance may come and it can cover, you know, daily expenses, but it wasn't intended to also cover the extra expense of a sickness and the hospital or medicines involved. Also, or a car breaking down. So a lot of these unexpected emergencies. It can also be for seasonal needs. We had a big uptick in August. And so in Mexico, and I'm sure many other places around the world, there's the huge school supply list, even for public schools. And you need to cover a lot of the cost of school supplies to ensure your kids stay in school. And we've also seen even to pay for education. So we have one client who she's a repeat heavy user, as we say. She's a great client. She has her own business, but she's also used the loan to help cover the tuition for her daughter. She's the first person in her family to go to university. She and her husband, who's in the U.S., both have primary educations, and her daughter is now in university in Michoacan. And she's able to. Before, she couldn't always pay the tuition. It was always a bit on and off, and now with the loan, it gives her that regularity, and it's become a you know, working capital and to be able to cover the cost of the tuition. And so I think with remittance flows, especially, it is something that complements other income. It's not, in most cases, the full income that a family receives. And it doesn't always arrive at the right moment, right? Imagine you have the gas bill or the light bill, you need it this week, and the remittance comes next week because that is when your family member gets paid. So you need to cover something this week. And so it really empowers the receiver to decide how she, because most are women, over 80%, manages that cash flow in her household to cover those expenses as they come up. You know, so it really puts the administration of those funds to the receiver. And then also what we've learned is that clients try us and they keep coming back. We found that they come back because we have a lower cost in the market. We're about half the cost in the market. They also love how easy it is to apply, you know, using WhatsApp. It's very easy to get onto the platform and to apply for the loan, and they get a response in minutes. And they also like that the level and quality of our customer service. We've been told that we're just nicer, which I think is, you know, it doesn't sound hard, but it is such a huge difference. And so, you know, you get these competing services where people are, you know, just not very friendly. And I think we can really also, you know, that's a big value add for PISA. And so that's why they keep coming back.
Wonderful. And you see the importance there of consumption smoothing mechanisms that enable these families like Wagely as well to be able to deal with these things in a timely manner at a cheap cost, you know, affordably. And do you guys think there is a trade-off or tension between growth and scale of your business and client outcomes? Like, How do you align profit and impact? And what is your investors' position on this? Like, Amrita, let's start with you.
Yeah, sure. Thanks, Gabriela. I think it's an interesting question, and I think a lot of the companies, startups in our space are probably wrestling with this. But I can say on behalf of Wagely, like we've been really privileged to work with investors who are really aligned with our vision for what we want to do and the impact that we want to make. The Asian Development Bank, East Ventures, and Tegra Ventures. These are some of our leading investors who are, they obviously they have their business to maintain as well, but at the same time, they have their own investment thesis, which really centers around empowering people who don't have access to other financial services, and that's very much in line with the Wagely mission. So we don't really, at least at this point, maybe we're still pre-Series A, so we don't feel that tension just yet. I think another piece that's really important about our investors is that they really understand the local market. They understand the context, and so when we say, hey, we need to make an investment in certain touch points, certain entry points, which in like Silicon Valley may not be the most scalable interventions, but in a market like Bangladesh or Indonesia, that's what's needed to actually get users to understand and use the product. And that understand piece, that digital and financial literacy piece, is critically important, for their financial health. Our investors, we're in a position in which our investors, they understand that local context, and they really support us as we want to grow the business in a way that actually impacts people's lives.
Noxie, would you say your case is different or similar to Wagely's?
It's similar. It's a similar case. I feel well represented in her response. I think with the probably in addition to what she has said is that the funding landscape has changed over the months. You find that the struggles of the market are still the same, but there's been a change in the metrics that are being looked at by investors. So where before maybe revenue was not an issue, now they are looking more and more into that. So what we have done as Boost, we've sort of found a way to balance, our cost. So we've done a lot of cost reduction exercises to make sure that we can scale easily without carrying a lot of cost. And we've also sort of aligned our client outcome with our value proposition, which is what investors are mostly looking for, because they can always measure our impact, using our customers. So I would say there's been a lot of change, and having investors that are aligned to what we are doing and what we are trying to accomplish in terms of impact, as well as revenue and profitability, I think has been very helpful, as Amrita has said.
And Ryan, what's your experience been in this case?
Yeah, I would agree with both. There is a trade-off. Some investors just want, aggressive growth and scale quite quickly. I think it is changing a bit, especially, it's also about knowing as a startup or as a founder that you can also choose your investors and understand where there's a fit, and I think it's really important to find that fit. So both from the investor side and the founder side, I think that's super important. And we've also been fortunate to have a great cap table of investors who understand the local market, who understand that 100% digital is not always the way to get adoption of digital financial services. And in a place like Mexico and Latin America, we're leaving out the majority of the population if we think it's going to be 100% digital. And so investors who understand that space and the opportunity that we've been leaving on the table because we're not trying to bridge that gap are the investors that we find a great fit with. And of course, they're pushing us to scale, define, and work on our unit economics and make sure that we're finding the magic formula to do that. But they understand it's going to take some time, and that we do need that touch, the touch piece of it. And there's some great models in the market that are leading the way and have been scaling here in Mexico, especially showing tech touch. And that has also helped me and other similar inclusive fintechs. And I think that's where it has to go, because again, just to repeat, we're leaving a huge part of the population excluded if we don't think of ways to disrupt the fintech space beyond just digital solutions and beyond just acquisition through Google or Facebook. We need to look at other models.
Right. Well, that's great. Well, congratulations to all those investors who are really willing to go after impact. And of course, we all want healthy businesses, and we all want you to grow and scale and provide your solution to more people. But it's great that you find that your investors are good partners in this, and they understand the local markets and the challenges involved in serving them, and that they're willing to be more patient and understanding of the limitations that your markets have, because you're really focusing on people who are, either excluded or not well served by current offerings in the market. So that's great. Kudos to those investors. And now I'd like to turn a little bit to see how you're incorporating gender considerations in your design and outreach process. One of the insights that came out of the 2021 IF50 data, and that we're beginning to see some glimmers of in 2022, is that women-led businesses are more likely to target and design for women customers. Can you guys speak to whether that's true of your companies? And if so, how are you incorporating gender considerations in this design process? Ryan, let's go with you.
Yeah, I think definitely there studies do show that there is more of and you see that both in women-led businesses, also women investors tend to focus on investing in women or serving women well. But I think it's really important to that no matter the leadership, the gender of leadership, we always need to focus on women. I mean, this is a huge part of the market. It just makes business sense to focus on women. In my case, our customers are over 80% women. So if we didn't design for women, we would be just not serving our customers well. And I think in any business, women-led businesses, we're definitely setting an example, leading the way of how to serve women well. But it should be an example that any business should take on, because otherwise they're leaving an enormous amount of customers out of the equation. They're not serving them well, and it's just not going to be in their interests. It's been shown time and time again that serving women well is a great business case. Women are great customers. Women are great marketers. And so if you're just designing for men, you're just not serving your customers well. So I think, we're leading the way, but there should be a gender lens in everything that we do, what every leader does across all levels, from their investors, making sure you have women investors as well, making sure you have women employees, and making sure you're serving your women clients, because that's going to provide diversity and different perspectives across the board.
Wonderful. And Noxie, in your case, also as a woman-led business, what would you have to say about that?
I think Boost was very intentional from the beginning. When you look at our business model, we highly push for women ownership. So I think that alone is a game changer, because what has happened in the market is that you find a lot of times that we enter spaces and we use the old economic model that has always been used, which is centered around exploitation and consumerism. But I think by virtue of promoting participation and ownership, at that level, especially around women and gender and young people as well, I think it just changes the game. And just like Ryan, we've also been fortunate enough to service 90% of our customers are women. So even if we didn't want to design our offering, to center it around women, we would be forced to. So there's a lot of consideration around gender. And I would also say that with technology, we are even forced to be more deliberate and intentional about it, because you find that with women, it's much harder to adopt technology because they are scared of it. Their level of exposure, in Africa, is quite limited. So you have to spend a lot of time with them, making sure that their comfort levels reach a higher level than they would normally. So I think we are forced, by virtue of servicing more and more women, we are forced to take it into consideration, in our entire value system than in just one aspect.
Great. And Amrita, your experience is slightly different, but would you like to comment on that as well?
Yeah, absolutely. I think it's interesting. There is, I think, a lot of talk around like women-led businesses focusing more on women. But I think to Ryan's point, actually all companies need to be focused more on women, no matter what the leadership team looks like. And for Wagely, I can say that while our founders are in fact men, they definitely recognize the importance of having women customers, but certainly women on the leadership team. It's one of the reasons why they brought me in. It's one of the reasons why we have women on our board, and we also have a few specific grants that focus on developing products for women from the UN Capital Development Fund, USAID, et cetera. So certainly from a Wagely leadership perspective, the team recognizes that having a diverse leadership team and a diverse team in general is extremely important. I think in terms of product design, it's, for us, it has to be top of mind because in many of our locations, women are actually the majority of our users. It does mean that we have to engage with users a little bit differently. When you get customer feedback, if you're going on site to a factory floor, if you send a bunch of men to get customer feedback, you may not actually get feedback from women because they may be uncomfortable speaking up or uncomfortable approaching those users. So when we think about how do we get feedback from customers, who do we send from our team, what kind of brand promoters do we use? Like we've actually had to employ more women brand promoters to actually reach those women users. I think that's, it's an incredibly important part of how we engage with the customers. And then even in the design itself, we've heard stories, particularly from women users that in Bangladesh, I'll give an example, that their husbands know when they get paid, right? Their payday, and they'll stand outside the bank or the ATM with their bank card and withdraw the money before the women actually have access to it. And with Wagely, these women are actually able to withdraw their money whenever they want. And so it enables them to have more control over it. And I think this is perhaps something that we didn't intend for when we launched the product, but because it's having such an important impact in this way, we can't help but focus on it. And we have to think about, okay, well, this is something we've started doing, but if we want to really practice what we preach, we really need to, enable that process even further. Like, what are other ways that we can help women improve like control over their own money? And now that that's become that's our biggest user, or one of our biggest user bases, and has had such an impact already, it's really just natural for us to continue developing our product to serve women better.
Great, thank you very much. And now we'd like to address a few of the questions that have been coming in. We don't have a lot of time left, but I think this one is particularly relevant to all your three models. So the question is, does touch add significant cost to your business? And do you expect that cost to be long-term? So let's start with Noxie.
It is a significant cost, but I think with us, what we've done is to make sure there's a lot of touch early in the customer journey, so that enables us to sort of relieve, that cost over time. And what we have tested recently is that we have launched into a new market in Senegal where there was completely no touch. So we are testing, models where there's a lesser level of touch than what we have enjoyed in the other markets. So I think there's a huge cost at the very beginning. I think when we started, we didn't know any better, but with the learnings that we've had, we've sort of been able to also work on the team and make sure that we can scale without necessarily scaling the team and carrying a lot of cost around our talent. So I think there's a huge cost. I've seen a lot of people who have spent a lot of money, trying to balance touch and tech. But I think there are models out there where you can have a good balance of support, but a lot of independence as well with the use of technology.
Great, thank you. And Ryan, how do you see that happening for you?
Yeah, in terms of the cost piece, it's interesting. I think in our case, ask me in a year when I have more more scale and cost customer acquisition cost data. But I think for us right now, it's actually more cost efficient because we're reaching customers who are already walking in the door. We don't have to go get them and then bring them to our product. They're walking through the door to pick up a remittance, and we're building on that touch point. And so that has actually lowered our cost of acquisition. And because if you look at Facebook or Google campaigns, the conversion is quite low. So there's a lot of spent on that for small conversion because people don't know it, they don't build the trust. So I think we're able to have more efficient conversion even if with a touch model inside the store. And so I think that has been good for now. We're going to keep it for a while. I think because we have the relationship with the agencies, and Pice is also bringing them value add, so it brings them additional commission, footfall, additional revenue, and I think also what we do see is that it will get more efficient in the long term. So yes, it's a cost for us. We pay promoters, we have the commissions to the agents, but it is key piece and it's embedded in our model. So in the future, I think we'll be able to scale more efficiently to more agents and have the model more fine-tuned, and so we can lower those costs. But I don't see it being phased out.
And Amrita, I would guess that your position would be similar to Ryan's in that regard, or how do you see it happening for Wagely?
Absolutely. I think I totally agree with Ryan and Maxi. Of course, there is going to be a higher cost when there's more higher touch points. But to the extent that we can reduce that over time and build it into our model and figure out the touch points that have like the lowest customer acquisition cost or are the most scalable is something that's been really key for us. One really great example that I'm really proud of the team for pulling together is our Wagely Ambassador program. And we have this in both markets where it's a high touch way of getting more people on board. It's using basically people who are already existing on the factory floors or who are already at various retail locations, who are already users of the product, who actually have high retention themselves, and getting them to share that with other people and get rewarded for it. And that means we can have to send less of our team out, can send less brand promoters out, and spend less marketing dollars on getting new customers and even continued use from customers. But it's actually a way that it's a high touch point itself. But when you think about how much of a cost it is, it's actually significantly less. So I think while we understand that, like, yes, we do have to have these touch points, high touch points as part of our business model, thinking creatively about what are the right interventions that can actually make those touch points more scalable, actually can reduce that cost in the long run.
Right. Okay. And there's another question, which, we should address really quickly, but I think it's interesting if any of you can think of what has been the most difficult part of running your business and what has maybe been unexpectedly easy in terms of running your business. So if you could mention one-on-one. Amrita, now let's start with you.
The difficult part is hard. I think honestly that touch point piece, like how do we create sustainable ways to reach our customers in a way that they not just have access to the product, but they really understand it and they understand the implications for their lives. It's not enough for us to just go on site to a factory and say, hey, use this product and like expect people just to start going, but actually engaging with users in a way that they really understand the product and see the benefit for their lives. I think that is something, and understand what they're getting into, because that's a critical piece of financial literacy and financial health. Is like you really need to have agency and ownership of the product and services that you're using. I think that's kind of the hard part, and I think in many ways we've been able to overcome it or work towards solutions. The unexpectedly easy part, I think, is actually our retention. I think once you kind of get over that hump of like, how do you use this product? Like what is the impact to my life? Once people start using it, we actually do see really high retention. And, seeing other financial services in the market and have really low retention, maybe like less than 20%. It's really nice to see a product where, customers are really happy with us and they want to continue using us over time. So yeah, that's one difficult and one surprisingly easy.
And Noxie, what would be the difficult and the easy one for you?
The most difficult has been around onboarding. I think customer onboarding has been quite a huge challenge. So you get a yes from a distributor, but from that yes to onboarding just takes a lot of time. And we've been trying so hard, to take learnings from the different customers so that we can try and shorten that period that it takes to onboard customers. So I would say that has been the most difficult part, because you find that you are dealing with different personas who have their skepticism around technology, and sometimes you have to just get through that hurdle and build trust fast. And building trust is a process. So I would say that has been the most challenging. The easiest, I would say, it's really just the ease of communicating our value proposition to the market and our prospective customers, and continuing to just build on that, I think has been the easiest part, because we listen so much to the customers, we listen to what the market is saying, and I think it provides a certain level of ease.
Great. And Ryan, super briefly.
Actually, the same. I think onboarding is always, friction. You always find things you can improve. And so we're trying to really optimize the whole model, from the bot, onboarding the bot, the promotion, and the value add for the agency. So that it's a big challenge, but it's something that we're constantly improving. Retention's also been easy. People love it once they're on it, similar to what you both said. And I think also something that I thought it was challenging at first, and it has become easier, or it's easier than I thought, was building a team for Paisa. I think, with a startup, an early stage startup, you never know if anyone's going to join you, right? You're just like, I hope, I can build a great team. And I just want to shout out to our team. Some are tuned in, that we have an amazing team, and they're all really excited about the vision and the mission of Paisa. And that just makes every day, worth it. And so that we're all going towards the same thing. So I want to say that for me was, something that has been surprisingly easier now. Ask me again in a year, as we try to build it and get more, but I really love our team. And without that, we wouldn't be able to do what we're doing every day. So.
Oh, fantastic. So we're coming to the end of this panel, but as one last question to you guys, I mean, in one or two words, maybe, how do you hope your end users feel after interacting with your product? Ryan?
Delighted. We want a delightful experience on our bot and in our agencies.
Wonderful. Amrita?
I think for us, it's relief. That feeling of a weight being lifted, or, when all of your stress and anxiety melts away.
And Noxie?
I would say shocked, even though it's not a positive word, but shocked. A lot of them are shocked at their own businesses, how their businesses are performing so well, and they never had insight into how their businesses were performing before our technology. So I would say shocked.
Wonderful. Well, you guys, we've come to the end of this great panel. It was a real pleasure chatting with you this morning. I hope the audience has enjoyed this panel as well. And well, we'll look forward to the rest of the sessions. And well, thank you as well for Financial Inclusion Week for hosting this great panel. And congratulations again to the three of you and to the other 47 winners of the IF 50 this year.
And thank you, Gabby. Great job.
Thank you, everyone.
Congratulations. Bye-bye, everyone.
Thanks, everyone.